Now, the issues that I'm having with this resolution of Credit Suisse, if you wish, bank resolution, is how it was done, right? So it was done overnight. It is unclear how much shareholders were consulted in that. Initially, it appeared that they would have no say. You cannot just completely wipe out shareholders. They're effectively owners of something, you know, without consulting them, and to change the rules overnight. Like legally, essentially what they did technically shouldn't have happened. The second problem is what happened with the cocoa bonds. It's kind of unheard of that the cocoa that got wiped out before the equity shareholders got wiped out. So in a sense, the bail-inable debt, or the cocoa debt, is a few hundred billions. The market is so important for regulators. It affects not just Switzerland, it affects essentially the US, it affects the Eurozone, it affects Asia. So essentially for 3 billion, which is what the equity shareholders got in the deal, you are sacrificing a market that is worth a few hundred billions that is essential for regulators. I think that was a mistake.
By now, can we say the risk of Credit Suisse is solved?
Yes, per se, Credit Suisse doesn't exist anymore from the perspective of essentially the final investors. Now, there's contagion. The contagion is to the cocoa bail-inable debt, and essentially debt that sits above equity that banks are issuing, and that is not a trivial thing to ignore. In terms of contagion, in terms of other banks being exposed to the losses associated with Credit Suisse, so it's usually asset managers that are the main holders of bank equity, presumably Credit Suisse bank equity. Of course, we know that there are some large investors from Saudi Arabia, for example, as well, that took the hit. So those are less of a concern for the regulators because, you know, they're supposed to be able to handle the risk. The contagion to other Eurozone and American banks is limited from Credit Suisse. If indeed that's the case, this should be the end of it.
Yeah, we have already seen the crisis facing the banking sector in Europe and also in the US. Will this go like a spread over like to the Asian market, and is it going to develop into like a global financial crisis?
At the moment, they're very different from what we observed in 2008 with the global financial crisis. It is a crisis for banks because their banking valuation, you know, the equity valuations are getting hammered for one reason or another. So that is one, but that's not, you know, our standard definition of a financial crisis. Usually when we talk about financial crisis, what regulators and governments are concerned about is significant spillover to the real economy. The major concern across the US and Europe is a structural change in the banking industry.
The last but not least question is, what could be the long-term implication of this deal?
So the long-term implication will be definitely on bank regulation, on how seriously advanced economies are going to be taken in terms of property right issues, particularly with systematically important banks where there will be, and there is heavy regulation by the government. So my main concerns is that there will be a steady state decrease in bank equity valuation as a result of this deal. The bail-inable debt market, the cocoa debt market, is going to shrink, and that was a very useful and large market. So yes, that's the consequences of how the deal, I think, was made, and there are negative consequences for the large banks going forward. So that's my main concern.